This is the Southside School of Financial Freedom Watch List and Market Report for the week ending April 15th, 2023. Our question this week is, what is NIM, or Net Interest Margin? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average decreased minus 0.42% on Friday, but was up 1.2% for the week. The S&P 500 decreased minus 0.21% on Friday, but was up 0.79% for the week. The Nasdaq decreased minus 0.35% on Friday, but was up 0.29% for the week. Looking at the week, we can see that there were 6 up finishes versus 9 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Tuesday, the Dow Jones Industrial Average finished up again, but the S&P 500 and the Nasdaq finished down. On Wednesday, all the major indexes finished down. On Thursday, they all finished up, and on Friday, they all finished down again. New unemployment claims were 239,000. Job growth totaled 236,000 in March. Retail sales fell 1%. Inflation rose just 0.1% in March and 5% from a year ago. Home buyer mortgage demand jumped 8% last week, and Bitcoin topped $30,000 for the first time since last June. New unemployment claims, job growth totals, retail sales falling, inflation slowing, home buyer mortgage demand jumping, and Bitcoin topping $30,000 for the first time since June are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the president, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is NIM, or Net Interest Margin? NIM is the difference between the interest income generated by banks or other financial institutions and the amount of interest paid out to their depositors and lenders relative to the amount of their assets. Banks take in deposits and they in turn make loans out to those for mortgages, car loans, and other loans like personal loans. The NIM is calculated by subtracting interest paid from interest earned and then dividing that difference by the value of the bank's related assets. Generally, the greater the net interest margin, the more profitable the bank. Is your bank profitable? Do you own any bank stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you're going to have to teach yourself. You must RSI, that is read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside Strategy. You can learn more about the Southside Trading Strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending April 15th, 2023. The strongest performer on the list this week was Riot Blockchain Incorporated, ticker symbol RIOT in the third column. It was down minus 0.15% on Friday, but increased 47.16% for the week. Riot Blockchain is a crypto mining company that primarily focuses on Bitcoin and general blockchain technology. Riot has deployed approximately 8,000 application-specific integrated circuit miners at its cryptocurrency mining facility. Through a subsidiary, the company also seeks to develop a blockchain-based escrow service for wholesale telecom carriers. Looking at a summary of results, you can see that Riot has increased almost 298% year to date. I did generate cash flow from Riot Blockchain this week, as I have in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside Strategy. The Southside Trading Strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 31.42% versus 7.85% up for SPY. A difference of 23.57%. The Southside is beating SPY by almost 24%. The cash flow generated by the Southside Cash Flow System for this week was 2.47% of the portfolio account value. The account value changed by 2.47%. Meanwhile, the S&P 500 ETF SPY changed by 0.8%. Bitcoin Watch. Bitcoin gained 9.18% this past week and appears to be on the verge of a bull market. However, it is down almost 56% from its all-time high, which was achieved in November 2021. But this year to date, it is up almost 84%. I sold option contracts on one position this week. It was a put that ranged from $0.00 to $64.34. You can get more details, including the total dollar amount of cash flow for the week, on the website, southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3, and they are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.